Well, good morning, everyone. Thomas Montgomery. It is a beautiful Tuesday morning, February 21st, 2023. It's 8 o'clock Central. We get together with our distribution partners most weekday mornings at this time, talk about strategies, tips, techniques, share success stories, and provide important updates. Well, we certainly have an important update today. Over the past week or so, we have rolled out the new credit and funding program, and we're not going to be redundant with that. We know your time is valuable, and most likely you're now familiar with that offering. The credit and funding program is an innovative resource for people seeking funding but lack the credibility to get approved, because it comes down to what you and I know. What is the truth? The truth is, if you're credible enough on paper, then you get approved. And if you're not credible enough, you get declined or approved for a lesser amount. So as we've talked about over the past week or so, the credit and funding program has the guaranteed capital raise, positions the client to qualify by improving their credibility on paper with the 3 C's that you and I know like the back of our hands, right? Credit, collateral, and capacity in a bundled approach. But that's all old news. That's not our topic today. The topic today is we have a new financing partner for the setup fee. So let's discuss the pricing mechanism of the credit and funding program. Well, the pricing mechanism, first, we have to identify, are you a white label partner or an affiliate? Because if you're a white label partner, you control the pricing. So I can't really answer that question. You would have to answer how you're going to price it. But let's look at it from the affiliate's perspective. So the credit and funding program is a program based upon paying for results. So instead of paying a bunch of money up front, we help the client become credible. It's a bundled approach. So we're working on all 3 of their C's. They don't have to pay a la carte for those resources, whether it be the credit sweep and credit boost to help improve credit. We provide the collateral support program without them paying extra. We help them have verifiable income to demonstrate the capacity to repay the debt. So the primary revenue from the credit and funding program comes from the performance fee after the client receives funding. Again, if you're a white label partner, you pick what that performance fee is. If you're an affiliate running through our normal internal program, we charge a 10% performance fee to the client, and we share that with the affiliate. The affiliate gets 3 points. We know we're guaranteeing a minimum of 100,000, so times that times 3 points, and so the affiliates know that they should be receiving about 3,000 from the client's funding, 3 points of 100,000, plus we share the upfront setup fee. Well, what's this setup fee all about? Well, there is a refundable setup fee. We collect this for 2 reasons. Number one, we have hard costs to get the client set up. There's material cost for us to get the client set up when they enroll, and I don't think it's our burden to subsidize the client. So number one, there's a setup fee that's refundable once they complete the capital raise. And then secondly, what's nice is that we're able to provide the client a mechanism to have some skin in the game, because what we've learned is if you eliminate any buy-in by the client up front, they're much less likely to participate. So there is a refundable setup fee when each client enrolls. However, the point of today's training is that we're able to finance that now, and that's our topic today. Just one more point on the setup fee. So the refundable setup fee, if it's a white label partner client, they choose what that setup fee is. If it's an affiliate-based client, in other words, a direct client of ours, then the setup fee is $999.99, just under $1,000. And again, it's refundable. If you look at the value proposition, your educated prospects won't push back on that because they realize all that they're getting. They're getting the credit sweep, they're getting the credit boost, they're getting the collateral, they're getting the assistance with the capacity, the documentation, and then they're guaranteed 100,000. So an educated customer will typically not push back on having a refundable setup fee. Now, an uneducated, possibly illiterate client will start squealing at that because they just want free. Well, we're able to meet them in the middle now because, as the topic suggests, we now have financing available. So that's our topic today, is to talk about how that financing works. So setup fee financing. So we're talking about specifically getting financing for the setup fee. We're not talking about their general business funding, not to be confused with that. We're talking specifically about financing the refundable setup fee if they don't want to pay out of pocket. So we have a new subprime lending partner just announced today, right now it's going out public. And so what does this do? It prevents the credit and funding clients from having the out-of-pocket cost for the setup fee. So in other words, we can arrange financing for that. This is a big deal. So let's talk about some of the attributes of the setup fee financing. First of all, it's an easy approval. It's literally, we needed to find a partner that was willing to do financing for bad credit applicants, because typically that's who enrolls in the credit and funding program. Not exclusively, but primarily it's people that have credit issues that enroll in the credit and funding program. So it was a bit of a challenge to find a lending partner that would accept clients that have bad credit, but we can check that box. We've been able to secure that. Secondly, they do not use Experian, Equifax, nor TransUnion for the funding approval. So there's no hard inquiries because they're not even doing a soft inquiry from the three main bureaus. So that's wonderful. This allows more people to be able to qualify for the setup fee financing. Very simple online application, and it funds very quickly. It's going to be an ACH transfer, in other words, a wire, if you will, directly into the client's account. So that is wonderful, and that's in one business day, next business day. Often, I would anticipate that you would ask questions, well, what are the repayment terms? Well, we know that they don't have a payment due immediately up front. They'll have payments over time, of course, to repay it back. And the way that the lender works is the lender works with the client to come up with a repayment plan. So I don't have a simplified answer of, oh, it's spread over 12 months or 24 months or 36 months. And again, we're only talking about the refundable setup fee here, right? Which is $1,000. But there's not a simple answer to say, okay, are they going to take that $1,000 and spread it over 1 year, 2 years, 3 years? I don't know. It's going to be between the lender and the client. This is also available with individuals with no credit history. And sometimes you and I will see that. We'll sometimes have people that come to us, and it's not that they necessarily have bad credit, but they've not established credit, or it's been a long time since they used their credit. So this lender will accept individuals that have no credit history. So you could have someone that just turned 18 yesterday, and they could potentially get approved. Another typical question we'll get is there a penalty for paying off early? And the answer is no. And again, the first payment is not due up front. So client will apply, and we'll go through the process in just a second. That's the next thing on the sheet. Client will apply, receive the funding, be able to pay for the setup fee financing, that refundable deposit, and they won't have a payment right away. When will their first payment be due? Well, it's not right away, but we've already covered that the repayment terms are set up based on the client's budget between the lender and themselves. So before I move on to the process, does anyone on today's live Zoom, I know a lot of you are probably listening to the recording, does anyone have any questions so far on how the financing is set up? Randy's asking a good question. So this is just specifically for the setup fee of the credit and funding program. Now, we still help clients, of course, with other types of financing, but we're not having a general discussion. We're having a specific discussion of what it is that we can do to help clients get into the credit and funding program. And if they don't have the $999.99 refundable setup fee, a new solution to that problem that we have, so we don't have to turn them away, because not everyone has the $1,000 to spend. They're still paying it, they're just paying it to a third-party lender, and it's still refundable. We're not going to refund interest rates, and that's a question Timothy's asking. What will the interest rate be? I don't know. They're going to underwrite it based upon the individual applicant, and obviously, if a client qualifies for better lending options, we'll consider that. But for clients that need a subprime lending solution, this would be it. Okay, so let's talk about the process now. The process. So step one, client enrolls into the credit and funding program. Now, how do they do that? It depends. There's 3 different scenarios. If they're direct to us, they're just going to go on our website, credit and funding, guaranteedfunding.org/credit and funding, and they can sign up right there. So that's scenario 1 of 3. Scenario 2 of 3 is if you're an affiliate, you have a link and you will give them the link and they'll sign up on your link. Now, your link will link to a page that looks exactly like this, but with your link, you're getting credit for it. So that's scenario 2 of 3. And then the third scenario is if you're a white label partner, in other words, it's a white label client coming in, they're going to enroll directly with you using your contract, your pricing, your terms. So step 1 is the client needs to enroll. We're not going to go working on their file if they're not a client. And so one of these 3 scenarios is how they would enroll. Once they've enrolled, then we're going to begin immediately implementing. And what that means is we're going to send them an Adobe onboarding document that says, hey, welcome, thanks for enrolling in the credit and funding program. Let's get started. It plugs them into the financial literacy curriculum, but specifically it's prompting them to complete a soft credit pull, no impact to their credit score, of course, and a PFS. These are some of the baseline data elements that we need to start figuring out where are the credibility issues. Because remember, what the credit and funding program does is it helps improve their 3 C's. Well, how in the world would we help improve their 3 C's or even know if it needs to be, if they need to be improved, if we don't have any data? So even before they've paid, we will immediately begin implementation by sending them this Adobe. Now, if you're a white label partner, you're probably collecting that from them. But if it's a direct client or through our affiliate channel, then we are sending this to them. And then thirdly, so once the client's enrolled, we've onboarded them. Now we need to figure out how they want to take care of their refundable setup fee. If they wish to finance it, then we're going to send them a simple 1-page application via Adobe to get the process started. They'll complete that, and then we will go ahead and help them apply for the setup fee financing, quick and easy online. So I'm highlighting more than I need. So that's the process. So the client first enrolls by whatever mechanism. We begin implementing right away, so the client's seeing value, and then we need to collect the setup fee, the refundable setup fee, and the refundable setup fee can either be just paid out of pocket or financed. If they want to finance it, we're going to need the 1-page app. Who has questions on, I'll make this a bit smaller so maybe we can see it all. Who has questions on the setup fee financing, and or the process? I think it's pretty straightforward. It's just we didn't have this resource before. I mean, we've always had lending partners that would love to loan money, but a lot of the people that's coming into the credit and funding program probably wouldn't have qualified for traditional financing offers yet. That's why they're in this program. So instead of turning them away or coming up with this 0% internal financing, which is a pain to implement, now we have external financing through a true lender. They focus on the subprime space. Now, if the client's not subprime, then what we can do is get them their normal first tranche of financing, and we'll be able to determine that from this page application. So let's say you have someone that comes in and they would actually qualify for more funding than just enough for the refundable setup fee. We will glean that from step 2A, and if that's the case, then that's fine. Then we'll go ahead and get them a larger amount of first tranche financing. But for those that wouldn't qualify for a larger amount, then what we'll do is be able to help them with this new program. All right, so Randy asked about prepayment penalties, and that was listed right here. So the new lending partner does not charge a prepayment penalty. So that is good news. Who else has questions? And Paulie, I see that you came on late, so if you need me to repeat anything. But here's the summary. Maybe we'll get out early today, but the summary is just as simple. We now have a new financing offering to cover the setup fee for the credit and funding program. It is described here with these bullets, very positive, very easy to qualify for. Now, I'm not saying that everyone will qualify. You know, they're going to, instead of looking at credit, we talked about that. One of the things that they will do is confirm that the applicant has a checking account. Because while the repayment doesn't have to be automated, and I probably should have added an extra bullet, because a lot of people hate automated repayment, and this lender does not require that. They offer it, of course, but it's not required that you automatically pay back your payments through auto debits. That's optional. But they do want to confirm that the client has a checking account, because that's how they send the money over. So the client will need to have a checking account. And we're talking about personal here, just to clarify. This is all about it's personal financing to cover the refundable setup fee. You might say, well, what about business financing? Well, of course, we're here to help them with that, but we're going to need to put their package together to go for business financing. This is just simply a simple way to get the setup fee financed. All right, and so again, let's just clarify. So if the client comes in and they are not subprime, which is what this new lending partner is focused on, then that's fine. Then we can get them better offers, bigger offers. The process is the same. That's why step 2A exists. Step 2A will allow us to determine, do they need the subprime lending option? And if so, then we move to 2B. But if they don't need subprime, now what does that mean? Well, you know, there's credit scores and there's credit profiles, of course, so that can vary some. But in general, you know, if someone's in the 400s or 500 FICO range, they're probably going to need the subprime lending option for the setup fee. And if they're 600 or above, there's a good chance that they won't need the subprime option. All right, does anyone else have any questions on what we covered today? And I'll get this recording put up on a YouTube channel and circulated. But we're having a lot of luck with the credit and funding program. It's well received. The clients, I think, appreciate the fact that it's going to provide a turnkey solution. Because once you've educated them about what it takes to get approved for funding, which is the 3 C's, credit, collateral, and capacity, and that the credit and funding program addresses all 3 C's, it's exactly what the marketplace needs. All right, well, thanks everyone. One more comment. Randy mentioned interest rates, and I don't know what the interest rate will be. They're going to come up with a funding offer based upon each client's circumstances, as we talked about. But remember, we're reimbursing the setup fee. So worst case scenario, the client is getting credit suite, credit boost, the collateral package to help with the capacity assistance and getting the $100,000 funding. And if their only expense is the interest rate off of a small loan to get the setup fee financed because they don't want to pay the $1,000 out of pocket, I mean, it's still a steal, right? It's still a steal for them. So it's not going to be a hard deal to close. All right. Well, thanks everyone. We'll see you back tomorrow morning. Have a great day. Appreciate your time. Bye-bye.